Yeah, let's kick it off. We know kind of how busy everyone here, and thank you very much for your time. So, good morning. I'm Yoav from ASTRA. I see that we have a few other ASTRA here on the call. Sarah, Nick, I see here, and a few of our close committee members. So, thank you very much for joining us, as well as others. This is another webinar in the Astra Knowledge Series webinar. And as I mentioned before, when we do a revenue management webinar, and especially with John here, we usually get kind of a good attendee level, and we can see it also now. This session is going to be recorded, so we're going to share it following this session. You have here the chat box. Please feel free to submit questions as we go. I'm sure that will be at the end also a Q&A session, but really now to the main show. I'll pass the microphone to John. He's done it in the past. He's doing it very well, and we're very happy to see you here again. So over to you, John.
Awesome. Thank you, Yoav. Pleasure to have you guys all join us today. If you haven't joined a revenue management roundtable, it's a great opportunity for us to bring top revenue professionals in the space together to talk about kind of just what's going on right now. You know, a lot of things are changing in revenue management all the time, both in terms of market conditions and strategies. And so it's a great opportunity to just hear what other people are experiencing and how they're reacting to it so that you can kind of hopefully take some of those things and apply them or think about them and how they relate to your own portfolio. If you don't know me, my name is John DeRolay. I'm the head of revenue management education at Wheelhouse. Wheelhouse is a dynamic pricing platform. I'm not going to talk about our product, much to the chagrin of my CEO, but it's really awesome. So if you want to learn more, feel free to chat. But really, the main thing is we do this series in the United States as well. It's very popular. I'm a longtime revenue manager. I used to be part of a really large organization that managed in 33 cities, about 3,000 properties, led a team of 10 revenue analysts. And I really like to bring people together to kind of help professionalize and up the game. And one of the things I found is that, you know, at conferences and things, just talking to revenue managers and having people listen was really beneficial to everyone involved. So we try to create that environment as often as we can. We've got a really great panel for you today. So I'll let them introduce themselves. Abdullah, do you want to give us a start? Let us know who you are, what your organization is, and any other tidbits you want about the year.
Thank you, John. Yeah, pleasure to be here. So Abdullah here. I look after revenue management at Home Time with a small team of ours. We're a collection of homes across Australia, quite a few different markets, from your urban city centers to kind of your big holiday destinations and a bit of a regional presence as well. So yeah, definitely a lot of different seasons, a lot of different events to track, which keeps it interesting and keeps us on our toes. But yeah, excited to share some info about that as well.
Awesome. Thank you, Abdullah. And Neil, do you want to introduce yourself?
Hi everyone, I'm Neil. I've got two hats that I'm kind of wearing in the situation. I'm working for Private Property Group, which we've got a couple of different branches around the place, but I'm managing a portfolio of about 200 in Foster, a couple of hours north of Sydney and Newcastle. It's very much a drive-to market. And I'm also just branching out and I'm just establishing a revenue management consultancy firm called Bear Revenue, in which I'm just trying to target the smaller and medium-sized companies that can't afford to have the good people like ourselves as a dedicated member of their team.
That's awesome. You'll be one of the first fractional RMs I know in the, I don't know, do you call it Oceania? What do you call your region of the world?
Australia?
Australia, yeah. I don't know. I said that on the last one and everyone was from New Zealand. I think they got a little irritated with me. But that's really great because we've seen a huge explosion of that in the United States over the last few years. So I'm glad to see that there's more support. I definitely hear for people asking for it. So pleasure to have you on the call, Neil. And Heath, do you want to introduce yourself as well?
Hello, everyone. My name's Heath. I work for Allogio, which is a large professionally managed holiday home short-term rental business across Australia and New Zealand. Similarly, we have a wide variety of accommodation and exist in wide variety of regions, but predominantly it is out in the regional areas or across the coastline. And yeah, I'm relatively new to the short-term rental business as well. So started about 6 months ago, just getting my feet on the ground. But it's been a really exciting time to learn and exciting industry to join as well. So thanks for having me.
Awesome. Pleasure. Thank you, Heath. So structure is going to be pretty basic. It's going to be pretty conversational. So the main things we're going to talk about here are what's been happening during the winter, what you guys are kind of seeing right now, what strategies you're putting in place, what you're kind of anticipating, and what you expect for the summer and how you're going to approach that from kind of a revenue management strategy perspective. So it should be a pretty good conversation. Our panelists, please feel free to chime in, but I will kind of rotate around and moderate so we don't have any gaps. And if anyone does have questions, please feel free to ask them in the chat. I will try to pay attention to those throughout the call and kind of work them in, assuming I think the question is a good one. Okay, so let's just start here. I know you guys are pretty much flipped from where I am in the United States. We're just ending our high season in the summer for a lot of our markets. But you guys are coming out of your winter season, right? So how has the winter been going? You guys, because you have that summer that kind of starts the year, the last time we were kind of talking, it seemed like things came in pretty well for a lot of the panelists on our last conversation. And there was an expectation that it was maybe going to be a little competitive and that people were maybe going to be a little bit more conservative, trying to just put occupancy on the books. Booking windows seemed pretty short. There was a lot of consensus around that, and that expectation was pretty true. Or it seemed like everyone kind of had that expectation. So I'm wondering, how did the winter kind of go for you guys? Was there things that really showed up in your pacing that caused you to have to adjust your strategy, or anything that surprised you, or anything that you think you did particularly well, and what was it? And why don't we start with you, Neil, for the first question?
Right. Well, I mean, getting into from Easter was huge. And then we actually traveled through into the early and middle winter, and it was amazing, actually, how well it responded. Despite the fact that we had a few natural disasters in the local area, we had a nearby town basically get wiped off the map. But we've seen a lot of people just delayed their stays, perhaps due to that, and then came back a few weeks later. It was really strong return that we've seen on that. People are just coming away for really short stays, though, as the trend always seems to be. Nice short stays, but if you target that, you see the good results from that, rather than just trying to get people to have and come away and spend a week or two in the place they don't necessarily want to. So we've just been seeing that response of them when we target what they are trying to want. We're seeing that. Of course, August, dead. We've seen tumbleweeds rolling by. And the trick will be leading into the spring. But I'm sure we'll get into that in time. But
yeah. When you say so that short stay thing, I think that's a trend we've seen a lot in the United States too. Some of our most probably sophisticated markets, we've seen this over the last few years, really a degradation of like check-in, check-out restrictions. So Saturdays, Friday to Friday, really falling off and not being offered near in the same volume. We're also seeing people really that average stay go from the week to the 5 days or the 4 or even the 3. What do you mean when you say really target the short-term stays? How are you doing that in your revenue management?
Yeah, great. So putting in rolling back tools within your software to target longer stays further out, targeting shorter stays when those stays don't fall through. And I'm all about the 2-night stays. Traditionally, 3-night minimum would have been the approach, because the owner would say, what's the point in having all these stays in here? I want people to stay in there as long as possible. Of course we do. We'd love to get people come away for a week or two at a time, rather than having the churn of check in, check out. But at the same time, if you target it right, I'd prefer to have 3 2-night stays in a week rather than 1 7-night stay. And you might think, wait a second, the maths ain't mathin'. What are we doing here? But if you can target a higher average daily rate for those stays than you are for someone who's coming away for an entire week, why not? Of course, you have to get your operations down pat. You've got to have your cleaning turning around. And if you're not using the right software for tracking that, just as using the right software for pricing, you're behind the ball. So you've got to get your operations right to get those early check-ins, keep everybody happy there. But if you can get those constant little short stays, great. Or alternatively, if you're just having them in on the weekends and it's empty in midweek, well, then the owners can come away, I guess. And you can kind of encourage the owners to say, get out of your places during those weekends, come and stay in them during the middle of the week when no one's going to be there perhaps, and get those higher returns for those shorter stays. More check-ins, perhaps less guest nights, but we're seeing a good response from that.
Yeah. Do you have any tips for kind of driving that weekday occupancy? I think one of the trends I see is the market kind of necessitates shorter stays because, you know, you end up competing with people and you're just not necessarily getting the fill at the longer stay. But sometimes you see a situation where the weekends really do just only book at the shorter stay. Do you have some tips for how you're kind of doing that infill if they do start to book out on the weekends?
Well, just putting in some good old-fashioned adjacency factors to pull down those prices for stays around it. You've got your stay for, I don't know, your Friday to Sunday, and then you're pulling back those prices for those stays for 2 or 3 days on either side. It's a useful tool to try to get those price elastic bookings to come in, especially last minute, because that's what we're all trying to do, is target those booking windows for when people are actually going to book, rather than trying to go, okay, I could flog it out at $10 a night 3 months to target bookings from 3 months from now. But if no one's looking, the only ones who are going to book are those bargain hunters. So I find just using those tools to get those shorter stays has been helpful in plugging those gaps, getting those weekends full. Pretty much the idea, of course, is trying to get, I don't know, 45 weekends a year booked in a place. Midweek, that's when you get it booked during the school holidays. We've got the spring school holidays coming up. Tend to often see, like, of course, like 3 little peaks around it. You've got your weekends on either side with a long weekend in the middle. Kind of got your little troughs, but just trying to target those gaps in the middle. That's what we're much more focused on now, and we did see a good response from that in Easter with a whole mix of people. Some of them were staying because we had Easter and Anzac Day long weekends, 2 weekends in a row, and so we saw some people were going to stay an entire week through. Great, loved it. Many people weren't. So, but some were going to come away the first weekend, some that later weekend. And how did we get that gap filled in the middle? Well, making sure that it was flexible for stays along further out than you might think. I mean, having a 2-night stay is better than a no-night stay in some regards. But at the same time, you don't want to just flog the place out and just have wear and tear.
Yeah, totally. I think what I'm hearing from you is almost in a way setting these kind of like different length of stay strategies week to week. This was a big theme for American organizations across the South this year, where they've been used to just calling spring a high season when really it's like 2 or 3 weeks are maybe high, but the rest are really low. And making sure that you actually have those different pricing and length of stay strategies on the correct weeks, so that you can be most competitive for any week all the time. Awesome. Well, I think that's some really great advice, Neil. Let's hear from Heath. Why don't you tell us what happened for you guys in the winter? What were you seeing? What were some things that maybe worked or didn't work across your portfolio?
We have quite a variety across the portfolio. So, I mean, it's hard to pinpoint a few things, but I'll just kind of, I guess, give you a roundup of the areas that I see were challenging. Particularly throughout winter was the New South Wales state in general was a bit more of a challenge than some of the other areas that we exist in, particularly in the inland parts of the state. We found that there was quite a low demand sitting out there and really actually hard to keep in line with market in terms of pricing. So we really got to the bottom of our pricing a lot of the time, and had to really account for a whole bunch of other things in terms of owners' expectations and cleaning fees, etc. So that was an interesting time in that area, and also obviously northern New South Wales up in the coast there as well. There's challenges, as probably all know, in terms of the Byron change and some of those rules that have come into play up there. So that was a challenge. Those two areas, regions, we had pretty good success up in Queensland across the coastline, particularly looking into Gold Coast and then also up further north in Queensland as well. And across in New Zealand as well, we've had some really good positive demand across there, and we're able to really get some great yields because we've got a great new employee over there in the name of Nick, who's been able to help us capitalize on that as well. So yeah, that's kind of the general understanding throughout winter of it all. We are seeing positive movements moving forward. I guess some of the in terms of those challenges, what we've tried to do is really engage with our owners and try and give them an understanding of the markets, keeping them really informed in these fluctuating situations, and then therefore also try and bring them along on the journey and therefore enable us to be able to get a bit more flexible with our pricing due to some of the glass bottoms that we were reaching earlier. So really that engagement with the owner and informing them and sharing the insights and data, I found it quite helpful. And yeah, similar length of stay was a real key thing, really becoming a lot more, I guess, dynamic and flexible in that sense, trying things differently and really making sure that we're capturing the right bookings at the right lead time. I think that's quite crucial. So I came in and there was challenges when I first came in. I started around April, so coming into winter, and really found that there was some areas that we missed out on some of that earlier lead time, and then it's really hard to make it up from there. So what we really tried to make sure that we do is look forward, look at our pace, look at our performance versus market, and really understand that, and make sure that we're priced right in that right lead time.
Yeah, that makes a ton of sense. One of the things I'd love to kind of dig in a little deeper on is what kind of information you're sharing with owners, and like also how you're sharing it. Like what methods are you using to try to get a hold of them? Because obviously, you send an email and maybe 5% of owners will read it, and then they'll ask you the exact question you answered in the email next week when they talk to you. But that's been a big theme for revenue managers this year, especially in markets under any kind of occupancy pressure. Is how do you get the owners informed so that, like you said, you can actually have the flexibility to respond to market conditions. So I'm just curious if what data points are you sharing with the owners? What have you found to be successful? How often are you sharing it, and how are you getting that message across?
It is a challenging one because obviously you don't want to overshare and also trying to, I guess, not create too much workload as well if we have to do it on a continuous basis. But particularly we're using key data in general as a market understanding and just trying to keep it towards the adjusted occupancy or even calendar occupancy KPIs. And just a general understanding of whether the market's demand is going up or down year on year, and also an understanding of future pace. We also, in some areas, we need to really engage and hold on to some of the owners in certain areas which are not performing so well. So we really have actually they have lines directly to the RMs at times if we really need be. But that's also a fine line as well. So yeah, it does vary a lot.
Yeah, I definitely agree with simplifying things down to the occupancy level. I say a lot. We do a series of kind of like regional town halls where we go through market data together with people in the market. And one of the things I'm always telling them is, hey, at least on a quarterly, if not monthly basis, talk to your owners about what the occupancy situation is and just stick with occupancy, because usually that's pretty straightforward for an owner, right? And you can sometimes break through the cognitive dissonance between like, well, I think the economy is bad, but my property should be making more money, obviously. So that's a really good one. There's also, he was on the revenue management roundtable in the United States that we did a few weeks ago, but a guy named Bryant, he's a revenue manager in Alabama. And he has some great ways of communicating with owners because that's something they really try to crack. They have about 1,500 listings, a lot of owners, and they do a few things that I think are really valuable kind of takeaways for teams to do. And one of them is they do like a pre-recorded webinar from their RM team, and then they host it on their website and in their owner portal. So like every month they go through market data, they talk about their own portfolio. They're saying like, hey, our 2 bedrooms are averaging here. All of the owners have access to their own data, so they can see kind of what they're doing. And he talks about the strategies, like, hey, based on this data, we think that the market's going to be a lot more difficult in a few months. So we're going to err on the side of like dropping our rate and putting occupancy in. So he tries to put it in that kind of narrative context and tie it to the market data. And that's kind of available to everyone. Then they pair that with, of course, the listing performance specific data. They always have like a market data component. They do newsletters. He's big on like, you have to have multiple methods to get this, just to disseminate this information, because people aren't going to get engaged with, frankly, a lot of it. But if you have a bunch, you'll cover a decent amount of your owners, hopefully. Awesome. Thank you, Heath.
Good.
Abdullah, do you want to talk to us a little bit about what you've been seeing this winter?
Yeah, definitely. So we've got a bit of a presence actually in the northern markets in Australia. So they're actually going through peak season at the moment. So it's a little bit different. We do have the winter portfolio, but I'll just talk to this peak season that we're seeing at the moment because seen some good results. Yeah, it's been actually quite interesting. So these are fly to markets, so like your likes of Darwin and yeah, Northern Queensland, Cairns, and Port Douglas, Palm Cove, that we have to be set up very early in advance with your pricing and kind of watch it as he gets closer. So we've seen at this peak season a decent amount of growth in kind of nights sold, and we've been able to hold our rates as well, actually. And then one strategy, I guess, which is kind of like similar to this trend you guys are seeing with minimum length of stay. So as we draw closer, we've been experimenting with that kind of shorter stays, but keeping those rates high. So you're not just dropping rates. So that's been quite good and definitely a RevPAR boost this year over last year, actually, for this kind of peak season. So July, August is their kind of peak period. And if you talk about winter, I think, yeah, similar trends to, I guess, yeah, what Heath and Neil been saying. Definitely, we like to be far in advance. With this winter, any kind of promotions, we like to put in early birds. And yeah, especially some of these weaker months, what we identify May, August, generally no public holidays, no school holidays. Definitely have like that shorter minimum length to stay in. But then anything else outside of that public public holiday long weekends and stuff, that's where we try to keep rates high and maybe that minimum stay for a 3 night. But then, yeah, as we draw closer, if we're not seeing the demand, then we would maybe flex that a bit as well.
That makes a ton of sense. And actually, I'd like to dig into a little bit more about your kind of June, July high season. It's really a great opportunity and a big reason why we do calls like this, because a lot of people get pretty siloed in their own markets. But I often encourage people to do what I would call it, like look at bellwether markets, look at the markets that have reverse seasonality. Obviously, their exact trends aren't going to apply, but general trends were. Like if you're thinking about multiple, for example, in the United States, northern coastal markets are super high summer seasonality, but have almost no occupancy anywhere else. So they can't, as a market, tell if the market is weak until it's too late. But what they can do is they can look at markets that have spring high seasons. They can look at ski markets. And if they're seeing like all of these markets are under pressure, they can start to put in strategies that help them. So it sounds like you had some pretty good news right now.
Yeah.
You were able to see increases in sold nights. You were able to hold your rate. You're experimenting with kind of the fill, which is a nice place to be rather than the core business. What do you think is really driving that? What advice can you give to people to take advantage of it if they're seeing it? And, I guess a good thing to do would be like, as you think about how you built up to June and July from January through May, like what were the kind of like pacing markers that you were looking for to give you the confidence to, you know, to take advantage of what's going on in the market?
Yeah, definitely. So we have like a BI tool in our kind of that connects up to our PMS and stuff, which yeah, gives us all that kind of data. So historical data and point in time data, which is a big thing for us. So we have like a BI tool in our kind of that connects up to our PMS and stuff, which yeah, gives us all that kind of data. So historical data and point in time data, which is a big thing for us. So we have like a BI tool in our kind of that connects up to our PMS and stuff, which yeah, gives us all that kind of data. So we're basically taking snapshots every week of where each month is kind of sitting. So it gives you good context, last year's data versus this year's. So it's a good kind of point of difference. That's just one metric we're looking at. Obviously, there's, pacing of market as well. So we're seeing particular weekends. So I think, yeah, a theme that Neil mentioned is within school holidays, you see kind of the peaks and troughs. So if we're seeing that as well, we definitely hone in and protect our rates as much as possible there. Maybe there's a little bit around in and around that we can kind of adjust. But the idea, the general strategy is being set up way far in advance and then kind of letting it play out and making those kind of small adjustments as we come closer and closer. And then, yeah, the fill strategy has been quite fruitful as it comes closer to the date. And for these fly to markets, especially, you're seeing like maybe there's guests that want that kind of perceived value. They don't want to book a very long stay as well. So that's why we might play a little bit with promotions, slight promotions as well. But yeah, for peak season, generally don't need to do that. But that's been a kind of like, yeah. So I guess to answer your question, yeah, is our own kind of pacing metrics, and then yeah, kind of market pacing metrics as well, and even down to kind of because our pricing software allows us to get particular neighborhood data, how that's pacing as well. So that's been a key focus and continued focus for us, especially we're starting to look now at peak season for the other markets, December, January, and even just before that, I think there's jumping ahead here, but there's a lot of events, some of our urban city kind of markets as well this year. So those are the few things we're kind of looking at.
Yeah. And one thing I was curious about is just because I've seen this as a trend that I can't explain or don't really know what to do about, but like you mentioned your markets are mostly fly to. And those fly to markets in the US are still seeing really large increases in very, very last minute booking. Don't know why. I'll give you an example. Hawaii, Hawaii is pretty far from everywhere. And like in short-term rentals, they're starting to put on like over 10% of the market occupancy within a week. And it's not all coming from domestic Hawaiian stay. So pretty short. And I'm just wondering if that's occurring too, for you. If you guys are still seeing a really strong availability of customer base in that short term, putting aside like not necessarily maybe at the rate you wanted at, but
Yeah, definitely. I think, I mean, there's a lot of factors, right? I think there's airlines do kind of discount fares as well, especially in the winter here. Yeah, and then anyone that plays at points hacking and stuff, they build up a little bit of balance and can use that as well. So I think it comes down to, yeah, the price just needs to be right for someone to commit. And it's always like a tricky balance on our end to kind of manage the expectations of the owner as well. But I think, yeah, maybe there's like a slight, it shows on the OTs now there's a slight discount to what it was. They might go and book that flight. And some of these fly to markets, especially, it's a good, so these sort of tropical markets are generally more of a like escape from these kind of cities that we're in, city Melbourne, which have like, yeah, gone through a little bit of a wet winter, especially, right? So I think it might be just like a kind of impulse consumer decision where they see the value is right and then they might flock to that. And I think definitely helped by discount airfares as well, I think, with a lot more supply of flights in the market.
that makes
It
sense.
might it might also, I think, have to do with this year's like tumultuous economic outlook as well, right? Like because people were a bit unsure, I could think of what the future was going to hold in terms of home loan rates, etc. And so people might have held off booking long far out holidays, but then things turned around a little bit better. So maybe they were also able to that extra spend to go in the
Yeah,
shorter lead.
that's a very valid point. I think, yeah, there's I'm sure you guys have in the States as well, but a lot of like talk about cost of living pressures and then interest rates and stuff. But then I think, yeah, generally outlook feels a bit more certain in the
Yeah.
last month or so. So yeah, hopefully good news for us for upcoming peak seasons. But yeah,
Yeah, I definitely think those are all good factors. I think it's a mix. Like there's no one kind of like what is the idiom for it? Like silver bullet. for why these conditions are changing. I think it's partially economic instability is changing when people are comfortable buying. Part of it is probably just consumer preference. People are just more comfortable not planning. It's easy to purchase. It's a lot easier. So people are more comfortable making last minute plans than maybe they have been, or at least, demographics who are starting to enter periods where they have enough money to do so will do that. And then I also think this is a big one that comes up in the United States. I'm not sure where it comes up for you guys, so maybe you guys can comment on it. But sometimes I think that the supply is actually very mismatched to the consumer. We see this a lot in the US where even though like pretty much across the country we're seeing pressure on occupancy in markets, people are still posting rates on average higher than what they were posting last year. So people are pushing the rate, falling behind in pace and under pressure. And so there's kind of like a mismatch to the consumer. And I'm wondering if you guys see that or suspect that. And if you do suspect that, like, because you brought this up earlier, Heath, you mentioned sometimes, you look at the market and you're not really deviating from them, but you're not seeing that pace. Like, what do you decide to do if you think the market itself is not actually very well optimized to the consumer?
I'm still learning, to be honest. Like, and each region is quite different. I mean, the challenge I'm finding is that there's this whole owner's expectations of what their return needs to be versus what the market can actually deliver, and then versus actually getting a return for both parties, particularly the owner. So that's where we tried to now look at the discussions and the engagement with the owner to really have those discussions around, okay, like this is where the market sits and this is where the rates are going to be, especially in those lower seasons. So either it's nothing or it's something. So that's where like kind of that glass bottom sat in some regions, only in the winter periods. But yeah, like you try and just follow your own game, I guess. You want to stay in line with the market in terms of your future pace of occupancy and et cetera, but you also want to make sure that you're outpacing them as well and growing. So yeah, get aggressive, but at the same time, maybe try and play other things like we were talking about in terms of shoulder nights, length of stays, your early birds, or even different terms and conditions, and things like that as well, when you're looking at your overall rates and availability. But yeah, break it down by 1 bedrooms, 2 bedrooms, 3 bedrooms, et cetera, as well. Trying to segment them out is also something that we're trying to optimize as well.
Yeah, that makes sense. Neil, do you have any things that kind of stick out to you for if you feel like the market's not very well optimized or there's opportunity that's not visible in the market data?
Sometimes you feel like you are working in a bit of a silo, even though you're surrounded by competitors, when you see that sometimes they might be not optimizing their prices in the same way as you are. Not everybody has access to the same sort of tech and the same knowledge and everything. And they're just going with, this is what it should be. That sounds great. And then as the consumer, you look at it and go, their ones are $1,000 cheaper than that one at the unit next door. Of course, I'm going to go book that one. But that one with your competitor might be underselling or overselling. I've got, say, like in town, a local competitor, real estate, that has about 20 listings, and they just have a sign in the window slapped in there saying, this is the fixed price all year round, no refunds, you get it. It's a no thrill sort of experience. And you look at, and importantly, you can't book online. You have to call up the lady and book. So when you're working with that in the market, and you're all doing these fancy new high technology and different approaches to things, and they're still working in the 80s, that's often a trouble in trying to get, are you hitting that right point or not? And there's a lot of people out there who are still working in a kind of fixed environment. So it's difficult to know, are you optimized against them? Because
especially in low season, right? As well, when there's not really any compression or there's no real, like, they're not really getting booked out. So it's just going to dilute everything.
Yeah, that's it.
Yeah, it's the response to owners that I give when they're showing me comps and they're like, this person's price like this is, well, they're you can only see that because they're available. They haven't sold yet.
No, absolutely. Yeah.
Yeah. Abdullah, do you have any markers that you look for that might clue you off that maybe there's an opportunity in the market that's not visible in the market data?
Yeah, I think there is like yeah, as Neil mentioned, there is a lot, the comp set doesn't move as much. So I think for us it's yeah, just trying to keep track of our own kind of KPIs for that particular market rather than sitting outside of like waiting on rates to drop further and then rate dropping our rates. So yeah, we kind of decide, look, May's if it's low season, we're talking about May, August, and even in and around that. This is the weak point of the year, and then yeah, the battle then is owners' expectations, and we try to do that, mitigate that in yeah with newsletters and comms and other things as well. But yeah, I think that's where we kind of sit. We said, look, we want to perform this, whatever it takes, for these particular months. We'll hold out for the peak season months in terms of rates, but maybe when it comes to kind of low season, we're like more occupancy focused there rather than kind of waiting for the market to drop.
Yeah, kind of like saying that your own pace is the first order of triggers, market is second.
Yeah.
You have to like follow your own pace first. If you're pacing behind, that's going to be number one, regardless of kind of what then the market data sheds context on that for you rather than driving it.
Yeah,
I think
definitely.
that's
And I think there's a key aspect of like keeping booking momentum as well, right? I think for especially the algos for the OTAs. So that's a key kind of point that we trying to focus on, especially if you're going into shoulder, going into peak, you don't want to be trending below in that algo space as well. So yeah.
Yeah.
I just
Yes, go ahead, Neil.
I was just going to say, like when your competitors are also working with different strategies, they might be working with a heavily occupancy based approach, and they're ready to rent them out at much lower rates. That also means that the algos go, all right, let's push you to the top of all the SEOs, and you're holding out at what you believe is a reasonable price point, and you're nowhere to be seen in that channel mix. So there's benefits, of course, to that occupancy heavy approach of you're first in the searches, but it comes at that cost.
Definitely. And it really does require the context of like, as the revenue manager or the property manager, you have to have kind of like an overall understanding of if you think things are getting better or worse, right? Because that's going to change your risk tolerance. If you think things are going to be better based on whatever macro data you're looking at or market data, or, you know, if you read the tarot or whatever you're doing, that means you might look at that and say, I think things are going to be better. I'm much more okay holding at the top of my comp set because I think later in the booking window, this is going to happen. The opposite is true if you think things are going to be much worse, right? If you think things are going to be worse, your expectation would be, well, I can't hold right now. And so having that kind of like dual, you know, I'm looking at my own data, but I also have to have kind of like a belief structure about how I think the overall market is, its trajectory is. That's where you're always kind of like having a conversation when you make any decision.
And at the same time, I think where you sit in the market, right? Like traditionally, like, you know, historically, you might not have to always be or have always performed above the market in winter, for an example. But at least if you're like still gaining on that last year versus the market, but not maybe beating the market, but you're still like at least growing, is another good point as well. But yeah, I agree with that whole understanding where the market's moving back or forth.
But then there's also the idea of if you often just look at what you did last year. Now, is last year the best benchmark to be working off? Because I know that we've changed our strategy remarkably from last year to this year. And I'm looking forward at dates, and it's depressing when you look at it as against last year's sorts of values. But that's just because we've changed strategy and we're holding out on that tarot card belief that it's going to all work out.
The intention, I think, is important. And this ties really closely into what we were talking about with the owner communication, because you need to use that owner communication to tell them the strategy, right? The strategy is, we think we undersold last year, so we're going to try to raise your rate, but that is going to impact your booking window. You won't see us booked as early because we think we're going to sell in this other time period. If you don't have those things linked up and you change your strategy, which might actually be the right choice, you may encounter a ton of resistance to it, right? Because owners will be panicked if suddenly they're not booked out a year in advance, right? And they don't have that, cash in the bank, even though it may be well under market value. So they do tie together when you're being intentional about like what you think is going to happen, what your strategic response to that is. You have to tie the circle up with how you communicate that to your owners, also your executive team. That's a big one. They're the ones who are like, you're sitting in your seat going, I'm going to hold this rate because this is going to blow up. And then your CEO is like, you need to drop all this rates because we're pacing behind. I don't know if anyone else has any PTSD from that, but I have a little. Awesome. Well,
Little
let's
Braveheart.
jump. Sorry, what was that?
Braveheart. Hold.
Um, let's jump over to what we kind of expect going into the future. So as we go into kind of the end of the year and the summer season, what do you guys think is going to be, happening? What are you preparing for? What are you seeing in your pace? Any good signs? Are you already, what are your plan Bs? What are you already changing? Really anything that comes to mind in terms of like what you're expecting. And since we finished off with you last time, Abdullah, why don't we start with you this time?
Yeah, definitely. Uh, our urban markets, I think there's a fair bit of activity in terms of events that we're seeing. So, November for Melbourne, expecting there's a few concerts, Metallica for one, a few others as well. And then I think there's in Adelaide and stuff, Ashes cricket and stuff. So there's a lot of things on the radar for us that we're kind of watching and actually good occupancy early. So definitely seeing some of those events pick up. Shoulder at this point for these urban markets seems a little bit behind last year, but expecting that to pick up maybe more last minute as well. But yeah, what's on our radar is more of this like events, and then yeah, lead up to peak season. So we'll be very much focused on that on the weeks coming, how that bookings are tracking and all that as well.
And what is like the data that you look at on a weekly basis, or ask your team, to look at so that you know
Yeah,
where to apply these opportunities?
definitely. So it's generally yeah, power pacing against last year with our own kind of data, and then yeah, particular dates. So we can see that breakdown, how they're pacing against last year and what they're pacing at the moment, especially where these events are in place. I think that that makes a big difference. So um, the other part of that is also uh, we're watching our bookings coming in through our BI tool. You can see which particular dates are peaking. Even gives us like a breakdown for it's like a daily report. Gives us a breakdown if particular dates are picked up. The team also puts together weekly reports for particular events. That's a big thing for us. And then especially for the end of the year in Australia, I guess like the last week of the year and the first week are usually the biggest weeks of the year. So definitely we're wanting to keep that pace ongoing. Um, just making one of those small adjustments. So I think that's where the balance comes in. You obviously don't want to drop rates, but it's just making sure we're not outpriced as well in those kind of dates.
Yeah, so getting really granular, really like,
Yeah,
I mean, it sounds to me like you're looking at stayed on pacing. I
yeah,
think this is something a lot of organizations, when they're young, focus on booked on pacing. So, like, how much did you sell week to week, which is a useful metric. But stayed on pacing is you're actually tracking, like, how much revenue do you have on the books for a given stay period. And that allows you as a revenue manager to get really granular because you might say, like, well, hey, November's looking pretty good, but it's actually just this week in November, right?
yeah.
And the problem with sold pacing is you don't actually know where it's falling. So useful tool, but that stayed on revenue pacing, I think it sounds like it's really allows you to get very, very granular and make those optimizations where it's not just the whole time period's up or down. It's I'm up here, I'm down here, I'm changing that week to week, that kind of thing.
Yeah, definitely. And I mentioned, yeah, so per market, we set kind of our own KPIs of what we expect.
Mhm.
Yeah, a bit of tarot card reading, crystal ball, kind of stuff as well. But definitely, so that at least this gives us kind of context of what we're kind of pacing, what we're working towards. And yeah, that's yeah, per market, occupancy per month, ADR per month, and then yeah, obviously the RevPAR that comes from that. So it gives us a good kind of benchmark also to like see how we're pacing compared to last year as well. Um, yeah, it's not just one metric. It's just like, yeah, the whole shebang when you're kind of looking at these things.
Yeah.
So,
And
Abdullah, when you say RevPAR, like, do you look at it? It's a challenging one with short-term rentals as well, right? When you go to RevPAR, like, so do you look at also your bedroom or whatever it is, RevPAR or whatever whatever they call it in this industry? So, like, because I found it very challenging to use RevPAR, but I always used to use it in history.
Yeah, it's yeah, definitely the property makes it challenging. I think yeah, the key ones definitely for us occupancy and ADR. RevPAR just like another kind of like yeah, nice
Yeah.
to have look at metric. Definitely occupancy and then definitely where rates are holding as well. Where we're seeing the rates. That's more, and then the RevPAR just comes as a nice kind of like mix together of that.
Yeah.
Good for kind of comparing maybe year on year when
Mm.
historically, but yeah, in our kind of industry, yet it tends to be um, yeah, not as easy to look at when it comes to like monitoring pacing, I think.
Yeah. Yeah.
yeah, I've always found RevPAR to be, I think it's one of the most valuable metrics, but it's always backward looking. Like most people split into the two ADR occupancy when you're looking for forward pacing. You review past performance, and you always have to segment down into similar group. So
Yeah.
comparing RevPAR between your two bedrooms and market two bedrooms, that kind of thing. Like, so it's not as I know what you're talking about. People do the per available bedroom, but I just think it, other than like really, really high level financials, if you're putting together like an investment deck, I don't find it to be as useful for the revenue manager because that denominator
Yeah.
is so flexible in our space.
Yeah. 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 Especially if you're churning like year on year, you're changing listings as well, right? Like, yeah.
Yeah. Neil, what do you think is going on for the summer?
Yeah, well, as I was touching on earlier, is that looking forward to our spring holidays, they're only 6 weeks away. And as Heath was saying, you've got to hold the line. You've just got to, you're thinking, it's only 6 weeks away. Why are my competitors all booked out for lots of places? Why are my places not booked out? But as I was watching one of your roundtables, over in America was saying, well, better to be ahead at full time than at halftime. So I just love that analogy of, yeah, better to hold out and get it right than just sell it out early. Of course, one key element of when you're in frontline property management, you're dealing with the owners, and so much of it is keeping the owners happy. If they've got a booking, they're happy. They stop harassing you. They leave you alone and you can get on with your job. So getting a nice early booking is great for that sort of thing of your mental stability. But when it comes to actually getting the results, you sometimes have to be a little bit riskier and hold the line, get that booking at that right price point. And of course, if it doesn't come through at the right price point, then you pull it back, but you can say convincingly, you gave it a good go. So that's where we're at, looking forward to the spring holidays. December, it's great. Everyone's booking ahead for that sort of time. And we're about 9 months into adapting a different pricing strategy of using dynamic pricing rather than just having fixed pricing, which I was doing a great job with, but it was all very backward looking. So now we're able to adapt going forward looking with all this extra data. It's turned some great results there, higher ADRs, higher RevPARs. The occupancy may be a little bit back, but we're also seeing, because again, sometimes we're targeting shorter stays. The old fashioned idea was 6 weeks of summer, everyone stays 7 nights. Bang, bang, bang. Don't generally see that over the 2 weeks over Christmas, New Year. Of course. But anything else, middle of January, there's tumbleweeds rolling by, unless you target those shorter stays. That gap between kind of the second week of January into the Australia Day long weekend, there's kind of a lull. I'm not saying that's a lull of no one wants to come away. The weather's beautiful, everything's great, but they're wanting different expectations of what they want, different prices, different stays compared to 2 weeks earlier. It's just trying to target that. So that is where we're seeing some great results in trying to get those peak shoulder sort of seasons. Not just considering the entirety of summer as just being one blanket big money season. No, you've got to target it granularly. That requires a lot more work, of course, but seeing some good results.
And that's where the software helps. I think I think the industry has been done a little bit of a disservice by the pricing companies selling revenue management, dynamic pricing as a set it and forget it. It's really not. The most advanced industries with revenue management still have revenue managers. In fact, revenue managers have become much more powerful in those industries than they were 20 or 30 years ago. A client gave me a good an analogy, and he was like, your property management or your revenue management system is a race car, and you have a bunch of different race cars to choose from, but you still need a driver, right? It's what your driver is going to be able to do the best on the track with. I'm not a racer, so forgive me if I didn't make any sense. But
well, a few months ago here, we had a last-minute announcement for a state lawn bowls tournament. The algo said, sell, sell, sell. Everything's going great. All these places are booking out. But it was the little old nanas who their fixed incomes, incredibly price inflexible. So in fact, what it was saying, put up the prices, and it's like, no. In order to get any of these grannies in to book your place, you ever need to push down the prices. That's when us lovely people come into effect to go, okay, let's do a human check on that and make this all work for reality.
Yeah. That's a great example of when do you recognize the market is not actually necessarily optimized to the consumer. And those hunches can really put you ahead. We've got about 6 minutes left. So Heath, why don't you tell us a little bit about what you're seeing for the summer?
Yeah, pretty positive overall. I won't go too in depth. November's a bit of a lull, as we can see. Also looking into next year, Feb and March need a bit of work, I think, overall in demand and pace. But the key areas, October's quite a strong month with some events similar to what Abdullah was mentioning. And obviously that peak period for Australia in terms of peak summer is looking really positive overall in market demand. So able to get some good rate and good occupancies. So looking positive for that.
Yeah. One of the things I wanted to kind of ask the group about, which I think is related to the summer, is when we did our Australia, New Zealand roundtable at the beginning of the year, I looked up some data, and the government of Australia was expecting Chinese tourism to retract, which is a big deal. Like because it's the number 2. Now, before this call, I was looking at some recent news, and it looks like that assessment is changing. They are actually expecting Chinese tourism to grow. They mentioned in the northern areas this year, Chinese tourism really bolstered a lot of what was going on. How do you guys see international tourism kind of impacting your summer? Do you have any concerns? Do you see that as a big part of your portfolio? Just kind of curious what's on your radar there.
Yeah, I guess for us, traditionally it's been a heavy domestic guest market, all of our ones. There is like definitely international demand there. It's good to see it. It actually puts pressure. I think they tend to go to Chinese tourists. I think they tend to go to these hotels, especially in these kind of urban markets. So at least that puts pressure on the whole market. So I am happy about that, but doesn't really directly influence as much kind of what we have. But definitely it's yeah, kind of on our radar and something we've been looking at as well.
Yeah,
More
that's
focused
interesting.
on your side of the world, John. They tend to deliver good rates and good lead time and good length of stay.
Oh yeah, American travelers. American travelers are still leaving there's a deficit. Well, when we're increasing it because our international inbound travel is falling apart right now. I won't go into that, but it's disastrous for a number of markets, and hence why there's pretty consistent occupancy pressures in most U.S. markets this year. It's somewhat ancillary, and like you said, Abdullah, it's not that it is directly impacting the customer base of the vacation rental product manager, like property managers. It's that the other products that are competing with us now have less of a base of occupancy, right? That in urban locations, hotels are much less occupied. So pretty interesting. But it does seem like US travelers are still traveling quite a bit. We do anticipate that deficit to continue, although, like you mentioned before, we do have cost of living concerns, and that seems to be showing up in our domestic data as well. Our shoulder seasons seem to be a little bit weaker, indicating that people aren't traveling as much. Now, the one kind of probably silver lining to that for you guys is our luxury segment is really strong still. So the wealthy still have money. And if you're going to Australia, you have to have enough money to get there. So those people will probably still have enough money to get to Australia. In fact, my mom's coming in September. So if you have any great suggestions, let me know. I think she'll be in like Sydney and up in the north.
The dollar goes further.
Yeah. Awesome, guys. Well, really appreciate you guys on the panel. This was a great conversation. I hope you guys had a ton of fun too. We will get the recording up and share it out with you guys. And that'll be, I think we shared on our YouTube, right, Yoav? The Wheelhouse one.
Yeah.
So we have all of the previous roundtables there too, and also the US ones, which, as Neil said, there's some good advice there because it's really just revenue managers. And even if it's not the same season, you'll be in a similar season eventually.
Thank you very much, John, and thank you, Abdallah and Neil. It's a pleasure, honor, insightful to have you all in this session, which was quite enjoyable. So thank you very much for that great way to start the day, and thank you everyone for those who joined us. As mentioned, we'll share the recording. We'll do a follow-up on that. If you have any questions, please send them through, and we'll see you in our next webinar.
Thank you so much,
John.
guys.
Thanks, everyone. Thanks, John.
Painting. I should have mentioned the painting behind
Oh
John.
my God, you did that
All right.
painting? Can you
So John is painting not by numbers, yeah? Painting. Yeah,
No,
freestyle.
I do the numbers at work.
Yeah. Now, Abdallah, when he joined, he saw John's background, immediately brought his own painting. Neil did something on the wall over there. Yeah, I don't know, freestyle. And
Yes, I created this all myself. It's totally not a green screen.
Next time, Yoav. Next time for me.
next time, if he's working now on something. So yeah, that's beautiful. Thank you.
Awesome.
Thank
Thank you,
you,
guys.
everyone.
Have a
See you
great
later.
Thanks,
day.
guys.
Bye-bye.
Bye.
Bye.